Hello, swing trading chart patterns for beginners. How do I spot pullbacks and breakouts? Those are the terminology that I do not use when I swing trade. So I swing trade without using chart patterns. And there are some chart patterns, specific patterns that when you are trading, you could try to see if they, if there is a pattern displayed that you can base your analysis on to enter or exit a trade. But I tend to swing trade without those patterns. I try to learn it last year when I was using short upturn and swing trading strategy to swing trade, but I just don't like to memorize things, and it was just I didn't really continue using it throughout the year yesterday. So today we are going to use two stocks on our watch list here. Microsoft is one of those. And when it comes to pullbacks and breakouts, especially breakout is a terminology that I don't when I swing trade. Our swing trading strategy consists of locating the obvious lows of your chart using maximum monthly chart to begin with, to trace them toward the price. The price is on the y-axis and the date is on the x-axis. Just trace your support line passing by the lows of the chart and trying to see if you can get to where the price is right now. And the closest we got was this one, but from there we could try to get closer as well. But by tracing those lines, you will see which one has multiple touch points, which ones that the price fall back to touch point with before going back up, and which one do you think are the valleys, or which one is the valley. And you are looking for long up trend line, more than 1 year trend line that has more than 2 touch points if need be. And by looking at those, we know that this is too low. Chances that it will fall back to this valley line is very minimal, and this one could be a possibility, but again very minimal. And pretty much that's just the way I do my analysis, because you can see those are years, the dotted lines, and the last time we touched base with this line, for instance, which was way here, and I don't even know what year was that, but it was before 2000, 25 years ago. So I think it's just probability for the price to fall back to this line is minimal. So when I pick this one, for instance, and last time we touched base with it was in let's zoom to see if it will show us more years here, was in 2023. So you see the probability is increasing here. So chances are it might touch base with this one is possible. But let's take this one that is getting even closer to where the price is. We will notice that a touch point, inside this one, a touch point, we have 2 touch points here, so which is now quite solid, and those 2 touch points are far between. It's now just the next 2 here. So and this one we have quite a bit of space between it as well. But I think it depends on the stock, because when it left here, that's when it reached the peak of that mountain before it fell back. So that will make sense, because it didn't pull back to this support line from here. So it went all the way there before it pulled back some years, 2 years, and from here it did 2 years or so, and then it pulled back, but it didn't pull back to this line again. a pullback to a secondary one. So we could well say that from here it could continue, going on for about 2 years. It's like a year in now before it'll pull back. And why now? When it pull back, maybe it might pull back to somewhere a little bit higher or to this one, but chances that it might pull back to here is decreasing just by seeing the pattern that is designing, just by following our own analysis. But we highlighted this one that we want to buy at this one, or at this could be a secondary one. If it pull back to here and start going up, maybe we might buy some if it does not come all the way here. But there is not much distance between those two. But as for this one, we just feel like this line is just too low for us to wait for that to come down to this line before we buy. That is pretty much the type of analysis we do when we are looking at the chart using a maximum monthly chart, just to first see that it is upward trend for this stock, and then trace those support lines and see which one we want to pick as the value to buy at. It could be more than one, and then we'll go to maximum daily chart. So on a maximum daily chart, you can adjust your lines if they are far from the line that you want it, the points that you want to touch base with, those candlesticks that you want to touch base with, you can adjust it. But then you can just continue extending it. And at this point, this one that we trace together on the maximum monthly chart, I can color code it, and we are using Thinkorswim platform. And then we have those two lines as the valley of the mountain that when it fall back to it, you see the way it touch base with it, went up a little bit, come back, and then start going up. When it touch base with it and start going up, we might buy some. So those are terminology that I like to use, and when I'm doing my analysis, I'm comparing where the price is to where I want to buy next. And today is October 17, 2025. Before the market opens, we are doing the analysis now, comparing the price after the market closed yesterday, and the price went down yesterday. That's why it's red here. That means the price at the end of the day was lower than the price in the morning when the markets open. The price dropped. But when you are looking at it, we can just say that maybe the price is still going up, like the trend. It is not, maybe it's not done reaching the peak yet, or maybe it's done reaching it. We don't know. We are just going to keep observing it. What we just know is it's far from where we want to buy it next. Therefore, we are not going to do anything with it. It's not a buy for us today, and we'll just keep observing it. When we are looking at Microsoft though, in 2024, 2023, even 2023, we use 52 weeks low and 52 weeks high strategy to buy around that support line pretty much in spring, and we sold it after it reached a new high somewhere there. We sold it. So we use 52 weeks within that year time frame. That area was 52 weeks low point, the lowest point within that 52 weeks time frame time. So we bought it, and within that year, the 52 weeks high was around that area. We sold it, pretty much make a good profit on it. So in 2024, that's when we start swing trading. Before that, we might say short-term trading or short-term investing, but we use that strategy that I just talked about, and we traded dividend stocks as well. So back then, using that strategy to buy them. In 2024, I went swing trading route, and we use short uptrend and swing trading strategy, and we traded multiple times. So you can see those arrows. The one facing up show where we purchased, and the ones facing down show where we sold. So we purchased it and sold it multiple times in 2024, and then we purchased it again and the price dropped. So we got stuck in it until it fell back to this support line, which is coinciding with, the peak of this mountain, and you might call it the resistance line as well. The resistance line is crossing this support line. So it touched base with it and start going up from there. So when it reached this high, in fact, it reached a new high around this. Some might say a breakout. I'm not sure. I just don't use that terminology. So when it reached a new high here, so that just means this price is all-time high because we are using maximum daily chart. So when it's showing that, that means all-time high in history. That's, this platform recorded. So this is the highest price until it breached it again here. So, and probably in July, a month later or so, we sold it. That's why we have this arrow here, and we make some profits on it. Not a lot of profit because we bought it at a higher price before, but some profit. But you can see for how long we remain in the trade being negative without selling it. So we didn't set a stop loss or anything. We don't like to set those. And then we sold it, and now we are waiting to buy it again. But do you see the way we did the analysis from maximum monthly chart all the way to maximum daily chart? We are going to continue doing our analysis on the maximum daily chart, but by looking at the big picture of the trend of the stock chart, we could well say that it's still on the rise all the way to here, and then it pulled back to this. So when it pulled back to this support line in 2025, it could take about a year and a half or so again before it will pull back again to this or somewhere higher. Who knows? If you want to repeat the process, maybe it will use this next resistant line from this. Do you see this support line? Maybe from this support line, if we keep tracing it going, maybe at some point where this resistance line will touch base with it, maybe that's around that area it might try to pull back to. I don't know if that's a pattern for this stock. A lot of time I don't try to see when the resistance line touch base with the support line to buy it there, because again that is the touch point, but it pretty much touch point with both somewhere here before that intersection. It does that, those pattern does not, like that's kind of V shape facing left. Now all charts show that type of pattern, and I don't base my analysis on those patterns to make my buying decision. But as you are analyzing things intuitively, you might come across those things when you notice that where this stock is touching base. Sometimes it's after the fact, and then you are prepared for the next one. Does that make sense? Just in case that pattern replicate itself, then you know that these stocks tend to follow that pattern. So it's just by looking that sometimes it's in the midst of it that you notice that where it touch base with the support line where you want to buy, that is corresponding to a previous resistance line. Then you decide that maybe it could be a good point that you can base on and make your purchases right from there. But just don't expect to see that for every single stock chart. Every single one of those charts, they are unique on their own way. So what I like to base on is just my support line. They are oblique support line for upward stocks that we trade, and I just like to pick the one that I like to buy on and just go from there. So this one is not a buy for us because we are the price is far from where we want to buy. If you are using different strategy though, you can still try to find an entry point here, assuming it's still going to continue to be on the rise for a while, pulling back, going up, pulling back and going up for a while. But at this point, I just prefer not to buy at any higher price because it reached a new high already. So when it left this support line here, it reached a new high somewhere here, and then pull back and continue for about a year or so before it was done. So from what, June, it could continue for until next June, for instance, or less than that or more than that or so before it will be done. But we just want to continue observing it. Something I noticed it too though is it tends to be on its lowest point around the beginning of the year, but it could well not be the case each time. Here it was April, here it was January, but here it was on the rise. It pulled back a little bit, but it was still on the rise here. So we don't know for sure if we can assume that in spring it tends to be on its lowest point, but it's worth keeping that in mind and keep observing it to see if by the next spring it will try to reach a valley line and go up from there. Then we'll have an entry point. But then at that point, it won't be a year time frame that it has been on the rise. That from the first peak to when it was done with that rise. But we are just glad with this profit we have in for the time being, and we want to wait to buy at a valley line, now at a support line supporting the upside wall of the mountain, because this is the mountain. From the valley to the peak of the mountain to the valley, you'll have a short uptrend line supporting the upside wall of the mountain, and another support line, a downtrend line supporting the downside of the mountain. And we want to buy at the valley line when it start going up and sell it before it's done with its peak and start going down. So purchasing it and selling it on one side, the upside of the mountain, is the strategy we are using for the time being. But keep in mind that it's not the only swing trading strategy out there. The one more stocks that we are going to analyze is MSI. Is highlighted in our portfolio because we purchased it and we have not sold it, and we purchased it in 2024. We have not sold it, and again you can see so many arrows on those. Just shows you that we purchase it every few days and sold it every few days, and we purchased it again and got trapped there because it was done, and then it pulled back, but it didn't really touch base with this support line when it pulled back, and then it's on the rise. But then, so we don't really know if this is the lowest point it's going to get, or if it's going to get close to this support line before start going up again. We don't know. We are just going to keep observing it. Yesterday the price dropped, so but yeah, we purchased it there toward the end of 2024 and we have not sold it. So you can see pretty much for 1 year time frame we have been negative in this one, and we still have it, and we are going to hold on to it. So the way you manage your risk when it comes to swing trading is, if you are not going to sell stocks at a loss, is to be careful and pick stocks that are strong company stocks. And the way I like to do that is just pick upward large cap stocks that have been around before the last recession of 2008, and then swing trade them. That way, if I don't buy it at the right price, I will just leave it in the portfolio until it become positive again, and then I can sell it and learn my lesson from there and do better next time I'm going to buy that stock again. But that is a strategy I use. So, and this is not a buy either today. And if we want to compare the way the support line here, that the way we did it for Microsoft, for instance, you'll notice that it touched base with this support line here when it start going up, and this coincide with this previous peak resistance line. So you have that. So now the next one, we have this maximum peak somewhere here. It's not touching any line just yet. Of course, it's touching this one, but this one is a little bit up high. So maybe it's going to touch base with this support line. When those two meet, I'm not sure. So we'll keep observing it. But why not? We can keep comparing. When it touch base with the support line where we want to buy, we can see if it's corresponding to any previous resistance line. If it does, well, it could well be a strong support line, but I just don't base my purchases on that. As long as it touch base with the support line, I like to buy at and start going up from there. After I see 2 or 3 higher lows, I like to buy some share after the first or second green bar that follow a pullback, and just hold on to it until you reach, the peak. And when you reach a peak, which is, a new high, again, all-time high, then I can start deciding when to sell that stock. And my analysis from that point will be from where the price is, from where I wanted to get out. And there are 3 strategies that we like to use. The first one is to know where the first peak is. This new high highlight will show up, and then we'll decide if we want to sell it at that point or stay longer in the trade. That's the first strategy. So to stay longer in the trade, we'll try to compare the last time you reached the peak, which will be somewhere if we leave this support line here, which will be somewhere here, because those will be peaks, so it will be somewhere here. So when you reach it, it continued for almost a year before it was done. Therefore, when you reach the next peak, it could stay in there for at least for about a year. Therefore, once you reach a peak, we don't need to sell it right away. We can stay in there for a few months. So that is the second strategy, and we can decide to stay in a half that time that he claimed that peak, creating multiple peaks. We can try to stay in a half that time frame. See, if it's 1 year here, we can say 6 months. The third strategy will be to say, okay, so what was when it touched base with this support line, the lowest price was 271, and when it reached these highs, that's the price there, the highest peak, and then we'll calculate a ratio. So 507 divided by 271, if that was the amount, $271, it gives us 1.8, 1.9. We'll go with 1.8. Keep rounding down. So 1.8. So if when it reach the support line and start going up from there, then we'll use that lowest point. It has not reached it yet, so we'll use that lowest point times 1.8. Let's just assume it reached the support line at 379, then 1.8 times 379, then we'll say that well, we will stay in the trade after the first peak. We will stay in the trade for 6 months or so, or when the price reach 682 or so, we will sell it. So the third strategy is to quantify that exit point, and then we'll use those 3 strategies, keep comparing where the price is to where we want to exit, keeping those 2 strategies in mind for our exits, or to sell the stocks and accumulate the profit that we lock in the profit that we accumulated through that time frame, from when we purchase it to when we sell it. But because we are staying in the trade for a while, for a long period of time, your entry point doesn't have to be precise, and your exit point doesn't have to be precise. And just keep in mind that when you purchase the stock, it might pull back on you. Some might say a reversal. It might pull back on you. You might be negative in the trade for a while if it pull back to below the price you purchase it. But knowing your long-term strategy, that your swing trading is kind of longer than than what swing traders do in general, you are not going to worry about it. You're not going to lose sleep over it, knowing that you are trading a good stocks and you buy it at a relatively low price, and you are going to just stay in the trade. So for a while, because again you bought it at the valley, and you know that it's going to climb a mountain to a peak for a while before pulling back, and you want to sell it before it start pulling back. So but along the way, it's going to be doing its zigzag, going up, pulling back, resting on the upside wall of the mountain. So it's good to differentiate your valley line from your support line, supporting the upside wall of the mountain. And I have a little issue with that. So sometimes I will select those support line as a valley line to buy at, and it will turn out to be a support line that is supporting the upside wall of the mountain. It's not the valley of the mountain support line. So trying to differentiate those support lines from those upside wall of the mountain support lines is the key, so that you do not pay a higher price for it when you are trying to buy at the valley line. Because when you purchase it at on the support line that is supporting the upside wall of the mountain, when it's done reaching the highest peak that you want it to reach within that time frame, it will start pulling back to below that support line, and you will get trapped in it. And that is the scenario that I have here, trading it along this short support line. When it was done, it pulled back. And again, we used a different strategy last year, the shorter version of it, trading on a short uptrend line. But this time we wanted to trade using a longer uptrend line, and the longest one is the valley line, and that is what we are using. So those are the terminology I use. This is how I analyze the chart to swing trade, to buy and to sell. And I definitely don't use chart pattern in my opinion, but yes, the one that seems to be a pattern that we can come across, and we come across it twice in this analysis, is having a resistance meeting a support line, becoming a touch point for the stocks to pull back from and start climbing again. But I just don't think all the stocks that I have on my watch list that I analyze tend to display that. But it's just those things you come across as you are swing trading, you are doing your chart analysis, that a little by little you'll refine your strategy, and you might find tips like this that will strengthen your entry point. For instance, a decision making or your exit point decision making is by doing that you'll keep experiencing those things and keep improving yourself, your skills, and be better at swing trading using the strategy you are using. So thank you so much for watching. We thank you very much for your time. We thank you very much for watching our videos. We thank you very much for all your comments. Thank you for subscribing to our channel. I'm Afiavi Liberman, Cross of Liberman Consulting L.L.C YouTube channel, and NinaSoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. Let's take a look at Microsoft that we purchased and sold. If we come across MSI, we can take a look at that as well. So MSI, we purchased it in 2024 for $4.97 a share, and we have not sold it yet. So Microsoft, we purchased it in 2024 for $4.67, and we sold it a year later, or close to a year later, for $4.95, and make $153 profit on that, or 6%. So, and it's a small profit, but it's a profit nonetheless, and we will just keep improving. And as you can see, those two, we purchased them at a relatively higher price and got trapped in it for a while before at least Microsoft became positive, and we just sold it and get out of it and just keep observing it. So when you purchase it at a higher price, if you do not want to sell it at a loss, you might get stuck in it for a while. And that's why it's important you take your time to select good stocks for your watch list. And we have videos on how you can do those analyses to create your own watch list. And that is just the watch list that we have been using for the whole 2025 of 79 or so stocks, and just highlighting the one that we won't want to have in the list for 2026. And already I start analyzing the master list again to see, stocks that I will want to add to create my watch list for 2026 with. And I'm pretty much, making some notes there as I'm analyzing them also. But you'll have the list for 1 year, and then you'll pretty much flag the one that you don't want to continue swing trading, and toward the end of the year you can take them out and replace them with some others, and over time have a good curated list of a specific market capitalization stocks that you want to swing trade. And why not? From large cap you can move to mid cap, small cap, but large cap is good to begin with. They tend to be higher price, but you can find some that are less than $100. You can begin with those and just start small, 1 share per trade to begin with, to test your strategy, to see if the strategy is compatible with that stock's chart. And once you have that confirmation, to increase that profit, next time you are going to buy that specific stock, you can just buy more share from there. But do you see the way I got stuck in here? So you don't want to allocate too much of your capital to those trades, especially if you are trading it for the first time. And this I didn't trade for the first time at this point. Traded multiple times last year. But when you are trading one for the first time, it's okay to buy just one share. It's not the profit you are focusing on. You want it to see if you can actually have a profit, even that just $1 with that strategy you are using and the stock you are trading with it. And when you have at least $1 profit after you pay your brokerage fee, then you can say that your strategy works with that stock. That stock can remain on your watch list, and so forth. And next time you are going to buy it again, you can buy more share to multiply the profit you wanted to make from that trade. So thank you so much for your time. For more of our swing trading tips and how you can create your own watch list of stocks to swing trade, will you please check the playlist in the description of this video. Thank you for your time.